Many lenders require both coverage types before they allow a borrower to drive the car away. Even if the state's DMV regard the coverage as optional, driver must accept that lenders can make the coverage mandatory for as long as the lease period is valid. Not at fault. Although it seems that auto insurance is only important for the at-fault party in an accident, the not at fault also needs auto insurance for legal reasons. For example, when an uninsured driver becomes the victim in an accident, the police officers in duty should still ask the driver to produce proof of financial responsibility. Failure to produce insurance card or similar document will result in driver license suspension. In worst-case scenario, there will be fines, punishment in form of voluntary service for the community, or jail times. No matter what the punishments are, uninsured drivers are in real risks of difficult consequences. High-risk drivers. In the states where auto insurance is mandatory, uninsured drivers, even when they are not at fault in an accident, also have to deal with potential driver's status relegation from low risk to high risk. In this case, higher is worse. In the U.S., there are plenty of traffic checkpoints where police officers have the rights to ask for drivers' insurance information. For those who drive without proof of insurance, there can be penalties such as SR22 requirement. SR22 is a certificate to guarantee that the holders will meet insurance requirement. The certificate also indicates high-risk driver status. How to deal with high-risk status. High risk is not just a label to indicate a driver's tendency to break traffic regulation, but it puts heavy weight that the holder must carry in terms of insurance. A high-risk driver cannot apply for random auto insurance and expect easy approval. Most insurers deny such application because they want to avoid potential expensive claims due to reckless behaviors behind the wheel. Once a driver gets her high-risk status, any typical insurance company is reluctant to provide coverage. The solution is to turn to non-standard auto insurer. Standard versus non-standard. Auto coverage from either standard or non-standard insurance company is the same, but there is big difference in price. Because non-standard insurers accept the fact that their customers are high risk, they tend to charge more expensive premium rate. However, there are some companies from which high-risk drivers have options to lower the cost with discounts or payment options. Good to Go Auto Insurance is the first name that comes to mind, with its abundant options of discounts for drivers or vehicles that meet the eligibility requirements. A completion of a driver course and the existence of safety device in vehicle can bring substantial price reductions. Other discounts are available for good students, loyal customers, and ticketless drivers. Good to Go even offers 3 payment options to help customers manage their insurance expense. Economy plan is the typical payment method in which customers pay in installments every month. Quarterly plan is another installment, but the payment is due every 4 months. The last option is annual plan, with which customers pay in full upfront. This method comes with up to 31% discount.